This is Alan Bush with the daily financial forecast for Thursday, July 30th. Starting out with the stock index futures, did see a little pressure develop with the GDP for the second quarter coming in up 2.3%. That compares to the estimate of up 2.5%. This influence was partially offset by a revised first quarter GDP that came in up 0.6% against a previously reported down 0.2%. Also some additional weakness coming into stock index futures on a report that the IMF board said that they cannot participate in a third Greek bailout. So that is the news that's affecting a lot of the financial markets since the GDP report came out. Still inclined to think that we will see a recovery later this afternoon in stock index futures. Still thinking that the main trend is higher. So from here, look for some recovery, even though we did have two pieces of bearish news this morning for stock indices. Now, moving over to the currencies, seeing the dollar index firming, this in a flight to quality move in light of that IMF news that they will not participate in a third Greek bailout. Longer term, we feel that the dollar index will work lower and that the Fed will probably delay a rate increase, which is very much contrary to what the Fed has been saying. Over the last couple of weeks, they said that there could be 2 rate increases before the end of the year. Even Yellen indicated that there will likely be a rate increase, but she did say that it is data dependent, which I think is they're out to not raise rates if the economy does not improve sufficiently to warrant a rate increase. So from here, look for some lower prices in the dollar index, even though we are seeing some morning flight to quality buying. Euro currency lower. We did have some bearish economic news out of the Eurozone in the form of German unemployment increasing, or I should say joblessness numbers increased in the most recent reporting period. However, this was somewhat offset by the bullish influence of some better economic numbers in the form of economic confidence in the Eurozone. Seeing the pound a little bit better as traders continue to believe that the Bank of England will raise interest rates next year, possibly in May. And also with crude oil prices a little bit lower, some pressure in the commodity currencies, the Canadian and the Australian, but I think we can see some recovery between now and the close in those two currencies. And in the interest rate markets, the front end of the curve has been under some pressure, especially in light of prospects of a rate increase from the Fed. The back end, namely the 30-year bonds, advancing very suddenly with flight to quality. Apparently the reason for the buying coming into the long end of the curve, this on this most recent IMF news, that came out around, I have to say, about 9 o'clock. We got that news that the IMF board will not participate in the third Greek bailout. So that prompted flight to quality buying at the long end. Inclined to think, though, that a good portion of these gains will be given back later today in the 30-year bonds, and longer term, we believe that the trend is still lower for the long end of the curve, and I would expect new lows for the move within the next 3 to 4 weeks for the 30-year bonds. So good trading, everyone, and once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.